All right. I assume it's recording. Trading view. All right. So trade recap was a loss again. Haven't traded in like a little over a week because of Christmas and then New Year's tomorrow. I mean, I could have just not traded this week either, but that's what we were looking at. All right. So let's mark out our time frames here. So we have midnight. All right, midnight. 5, and then you can do 8:30 for pre-market or 9:30 for actual market open. I do 9:30 because pre-market liquidity sweeps, I guess, don't count for the strat. But basically, what we see is previous session accumulation, and then a push to the upside, more accumulation, and then market open. We have this candle with a large wick to the upside, and then a push down to the downside. And then we had a bullish bias today, so we were looking for entries on the 5-minute. On the 5-minute, we had relative equal lows here as liquidity. We pushed below as to what I thought was a sweep, push down below again, and then right here, this range, I was looking for an entry somewhere in this fair value gap here, and basically I was going to enter off of equilibrium of this range, which is, when I was looking, it wasn't even, or it was in the fair value gap, but now looking back at it, it wasn't. So but yeah, so we broke our rules just based on that alone. There we go. So this full range, which I should have marked it out based off the 3 candles, because that's what a fair value gap is. It's a pattern of 3 candles typically. But anyway, equilibrium wasn't even in the fair value gap. We did have an inverse fair value gap and the fair value gap that could have been filled. Another thing is, we didn't quite break structure because of the technical high, because you have the up close and then the down close candle, and then you mark out the highest point between those 2 candles, which is this. So what we should have waited for back here. Okay, so an up close candle here and a down close candle here. We should have waited for a break above this, but what we got was a wick and then a push down, 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 down to these very strong equal lows, previous session lows, which, being previous session lows, obviously makes it even higher of a draw on liquidity. So, but over the past week and a half, 2 weeks, we've been doing some refining to look for better entries. Today, I don't know, I was just hungry to get in because now we have New Year's, and then Thursday, I think we have news, and then Friday, I'm not sure, but today would have just been the best day to take a trade. I entered not off of confluences because, which the fair value gap is a confluence, but ideally you want multiple. So fair value gap plus equilibrium, or plus OTE, or plus an order block, or plus a breaker block, something like that. But instead we didn't actually technically break structure, and then we also didn't have equilibrium inside of the fair value gap. So that just is what it is. But hopefully I'll start a job soon at a gas station potentially, and then I can save money and trade. And then I told them I have schooling in the morning, so I can trade in the morning and then work from like 3 or 4 to like 11 or 12 at night, and then I'll be able to save up money because you need money. But that's pretty much it. So a losing trade, but following up, what I ideally want for the strategy is, and then also looking back for, optimizing like an A++ entry. These 5-minute lows, that is liquidity. That's a liquidity sweep. But ideally you want like a previous session liquidity sweep. So like ideally, if I did have like a strong bullish bias and we did actually move up for the day, we would have taken out this low, taken out London low, and then proceeded to push up to like these highs here, or even just this high here. And I could have got an entry off of that, but I kind of also got, I rushed a trade basically, or forced a trade just off of these lows, which that's not necessarily bad, but for an A+++ setup. And then another thing I could do, so ideally I want a previous session liquidity sweep on like high confluence lows. I want a break of structure, like a clear, strong, clean break of 5-minute structure with a similar bias for the 4-hour and the hourly, like both leading in the same direction, like no sort of confusion in the market, just a clear path on where market wants to go. A clean break of structure to desired side, then a retrace into a fair value gap with either equilibrium, OTE, an order block, or a breaker block in there, and potentially even a bear or a bullish close away from the confluence. So it could result in worse trade entries, but it would be very, very high confluence trades, and even 1 to 2. But if you have a high confluence, 60% win rate, 1 to 2s, and you're taking 3 trades, 4 trades a month, like 1 trade a week, and you're hitting most of the time, that's completely fine. But yeah, that's pretty much it. And hopefully I can reach profitability soon. I've been doing this for a while, but I'm not gonna give up. So yeah, bye bye.